I'm Robin Gagnon.
And I'm Eric Gagnon, and we sell restaurants. We started the nation's largest restaurant brokerage firm. We sell restaurant over a decade ago. You can find us online at WeSellRestaurants.com.
We are on the air once a week with expert guests talking about the topics that are trending in the restaurant business. Tweet your own questions today while we're on the air to our Twitter handle, Sell Restaurants, or post on our Facebook page, facebook.com/WeSellRestaurants. If we don't get to your question, we'll follow up on social media.
Our goal is to satisfy your appetite for acquisition, feed the need for restaurant reality, and serve up a recipe for business success. We go out into the restaurant industry to assemble the top authorities on topics trending in this fast-paced world, filled with both risk and success, to share the inside scoop.
We are joined today by two leading authorities who are going to give us their input on the state of the restaurant economy. We're at the start of the third quarter, so we'll be looking back at the first half of 2013 performance, as well as getting a handle on their thoughts and forecasts for third and fourth quarter. Joining us today is Bob Wagner, CPA and president of Net Financials. Bob's first job in the restaurant business was as a busboy in an incredibly busy Howard Johnson's. He lasted just one day. It was then that Bob realized his only chance to make it in the restaurant business was in the back office. After college, graduate school, and a career with a big international accounting firm, Bob got the help to help a friend who owned a successful restaurant in Atlanta's Virginia Highlands neighborhood. That was 24 years ago. Since then, Bob Wagner has become friend and bean counter extraordinaire to Atlanta restaurant operators. His company, Net Financials, currently handles accounting and taxes for about 200 restaurants in 6 states and publishes a quarterly survey on the local market. Bob, thanks for joining us.
Thank you, Robin. Glad to be here.
We also are very fortunate to be joined by Jonathan Maves. Jonathan is the editor of the Restaurant Finance Monitor, a monthly newsletter that offers unique opinion and analysis on the restaurant industry, delivered to some of the most influential movers and shakers in food service. He's also the editor of Franchise Time, a monthly glossy publication devoted to the franchise sector. In addition, Jonathan writes an award-winning daily blog at restfinance.com. Jonathan, thanks for joining us today.
Thank you very much.
Okay, so let's kick this off. Jonathan, we'll start with you, and maybe you can give us a pulse on national trends. You wrote last week in a blog posting that, quote, most restaurant sectors aren't performing to their previously held standards. Casual dining is down, quick service restaurants are flat, and even fast casual chains have seen sales growth slow some. One exception to this rule is pizza, which is generally cheap and works well in a weak economy. What is your take on the overall trending in sales performance of the different sectors in the restaurant industry?
Sure. Well, right now, restaurant sales are fairly weak, and casual dining is the weakest. If you look at Knapp-Track data, which tracks casual dining, same-store sales and traffic at casual dining restaurants was down 5.1% in July. That's a fairly weak number. And you're seeing this. Executives have been complaining about the state of the economy and talking about how the restaurant industry is not quite recovering as well as they had hoped this year. QSRs have been flat down a little bit. Burger King, McDonald's has been talking for months about the weak economy. It's been okay recently, but a lot of the customers going into QSRs right now seem to be looking more at value than anything else. And fast casual has been doing okay, but even there, in some cases, they're not quite performing up to their normal standards.
Oh, okay, that's very good perspective. Bob, on the other hand, you recently issued your second quarter result and said Atlanta restaurants uncork a sales surprise. What happened in the southern market in the second quarter versus the industry that Jonathan just described?
Eric, we survey every quarter a substantial number of Atlanta restaurants. These are independent, closely held restaurants. And in the second quarter, we were a little surprised at the results of the Atlanta market. Now, these are restaurants in casual, fast casual, and fine dining. 92 restaurants representing about $55 million in revenue were surveyed in the second quarter of 2013. And I agree with Jonathan. We've seen from a some cases negative, a very mild sales trend, and yet Atlanta restaurants posted a 4.2% increase. One might say 4.2%, this doesn't sound so great compared to the national average and trend that Jonathan just observed. That's a pretty good result.
Well, I would say so. Absolutely.
And Bob, you mentioned a little bit about the breadth of your survey. You're not talking to one or two restaurants. You have quite a sample there, and that's year-over-year data you're looking at, correct?
That is exactly right, Robin. We compare in our survey, we're only looking at restaurants that have been open for 18 months. So the brand new restaurants on the street are not included. That's by nature. And it's a broad survey of casual dining, fine dining, and quick casual.
Perfect.
These are independently held restaurants. There are no franchise restaurants in this.
That's good data because often that kind of information is the very toughest to get to. So I'm glad that you're able to include that data because it's easy to get publicly held information, but the privately held companies, that's a little tougher.
Yeah, and we're going to kind of go here seesaw, where we're going to go with like a southern perspective, and then we're going to go to the national perspective with Jonathan. And Jonathan, returning to the national front, I was intrigued by your blog article that said that Starbucks and Dunkin' Donuts are experiencing much stronger growth than the other segments of the industry. Recently, Starbucks posted a 9% increase in their sales, while Dunkin' Donuts was on par with the number that Bob told us today. The Atlanta number results at 4% increase.
Yeah, well, I mean, coffee is kind of something of a commodity. People always have to have good coffee. Something that they're unwilling to give up. And in both those cases, the companies have been very good about finding new ways to get people to drink their coffee and to come into their stores. So those chains have been performing quite well. And I think the other issue, particularly as far as Starbucks is concerned, is that if you look at their customer bases, they tend to be a little bit wealthier. And the exception in the world is that the economy right now has the people who are recovering have higher incomes. They're more likely to feel wealthier because of the stock market and housing prices, and so chains that tend to serve a higher income customer have actually been doing better.
So what you're saying is that the Starbucks customer is not trading down like you see in a lot of segments we've seen over the last 4 or 5 years. They're not trading down. They're holding on that $5 cup of coffee, and no matter what happens, they're going to buy it.
Yeah. They caffeine is, people need their morning injection of caffeine, so they're less likely to give that up right now. And Starbucks customers in particular feel a little bit wealthier. Their stock is doing well, and their home is increasing in value again, so they feel a little bit wealthier, so they're less likely to give that up.
Now, let me follow that up, Jonathan, by asking you, are there other concepts that are being successful in luring customers right now?
Chipotle still seems to be bringing people in. I believe their comp sales were up about 5%. And McAllister's Deli has done relatively well. Wingstop, chains like that. I mean, fast casual concepts in particular. Some fine dining concepts too. Business travel is still relatively healthy. So if you take a look at some chains that serve, or some companies that tend to serve more business travelers, they've also been doing relatively well. Goose Chris Steakhouse sales were up decently. So you see in fine dining has been something of an exception because of business travel, and again because people who are wealthier have a little bit more money to spend right now.
That's great. So, Bob, let me ask you to kind of weigh in on that.
Sure.
Give us your perspective.
Robin, I will. I completely agree with Jonathan's perspective with respect to upper income individuals. Remember, our survey is primarily Atlanta metropolitan area. We are very blessed in Atlanta to have strong health care, job force, educational, governmental, and services all tend to business visitors, as Jonathan just mentioned, talking about the national context. In the local context, those travelers have filled a lot of seats in the Atlanta restaurant.
Well, let's keep them coming.
Absolutely. Also, Bob, I want to know your opinion on this. Jonathan wrote recently that there's plenty of evidence that the industry is fighting for a limited share of dining. And you recently published a quote saying that restaurant operators attributed the sales increase to menu price increases and improved guest counts. They noted that the sales increase would have been greater but for competition from many new restaurants in the Atlanta market. Looks like there is no larger pie, but it continues to be sliced between the competing concepts in place and new ones launching. So should concept be focusing on growing average sales per unit instead of trying to open new doors?
Again, in reference to the Atlanta market, the demographics have been playing in our favor, and they've been playing, Eric, in our favor for now since the Civil War. In driving over today, I drove by a population sign for total population of the metropolitan Atlanta area, which is now in excess of 6 million people. I'm fairly advanced age-wise, but I can remember when it was 1 million. 1 million to 6 million. We're very fortunate to be in Atlanta in a demographically expansive road and have been for long.
So, Jonathan, let's get your take on that. Do you think that the growth should be happening at the unit level, or are you in favor of these new concepts that are popping up? Because they're fortunately it's what keeps us in business as restaurant brokers, but there is someone with a new idea every single day.
Boy, that's a good question. I think if you're looking at restaurants, there are some restaurants that are better off holding the line on growth and then focusing on building sales at the unit level. So your more mature restaurant chains would be, tend to be better off doing that in general, and then the smaller concepts, want to keep adding and building new locations. And I think the issue, you're seeing some building, not a whole lot, but those restaurants that are building new units have still found that their new construction are generating returns. So, as long as a new restaurant, as long as you believe a new restaurant is going to generate a return, you're still smart to build a new unit. Where the challenge is that it's a more competitive market, and continually maintaining sales is an increasing challenge for restaurant chains, because there's always somebody with that new idea who, or there's another aggressive restaurant chain that's willing to build a new unit down the street that may take sales away from you, and so it's tougher for operators right now to keep the customers they do.
And what we've seen that a little bit. Bob mentioned Atlanta. We mentioned some of the big chains in the past here, where they're all really kind of congregating in major markets. But as restaurant brokers, we also see a lot of underserved market in B and C markets where probably growth is the way to go. We see a lot of growth in some. I can mention Marion, North Carolina. If you've never heard of it, it's probably 40 miles outside of Asheville. I mean, there's a restaurant there, single unit chain restaurant that does over $4 million in sales, and so there's room, plenty of capacity for other concept to come there. But when you mention that to a potential franchisee or a corporate franchisor, they're like, "Are you out of your mind?" So I think you guys agree that some of the underserved market is probably a huge opportunity for growth instead of trying to fight to get one more store in Atlanta, one more store in Chicago, one more store in LA.
That you got a good observation, Eric. We have not seen that happen, that trend happen among Atlanta independent restaurant operators. Our little business handles 50 to 70 restaurants in Atlanta, and we're seeing additional restaurants by existing operators add at least one restaurant every month. And that's a trend that's going to actually increase. We have at the Krog Street Market a development that will open soon in Atlanta, another 1,000 seats or so coming in. We have the Ponce City Market. I don't know how many seats, but I would guess 1,000. And then in Buckhead, Atlanta, we have at least another 1,000 seats. We think we're saturated with restaurants already in the in-town Atlanta market. We're getting ready to see an explosion.
Jonathan, do you see, when you talk to franchise or developer, multi-unit operators, do you see a little bit more of that same thing that Bob said, to keep cramming more into the larger markets, or they are more willing to expand in B and C markets?
There are, I mean, I think there are some, yes, to both, I think. There are some chains that, especially a lot of these new chains that really want to go into more to urban or suburban markets. You see a lot of concepts that really love lifestyle centers. But you also see, I mean, I can think of a handful of concepts off the top of my head that are actually looking at those B and C markets in the Midwest. We have a concept called Pizza Ranch, pizza buffet chain that has really built a lot of success going into those type of markets, and a few others that have really found this niche of going into these smaller and mid-sized towns, and they're actually doing fairly well. So, I mean, I do see a little bit of both, where there is such a focus on these bigger markets that a few chains are avoiding them altogether, and they're finding some pretty good success going into smaller places.
I'm reminded of the Zaxby's check, which is based in Athens, Georgia, which has, from outside appearances, that is their strategy, to go into small and mid-sized markets, and they've done incredibly well.
Yeah.
They are one of the, Zaxby's is one of the fastest growing chains out there right now. And I was just, coincidentally, I was just driving through the South on my way to Charleston, South Carolina, and I remember that there were a heck of a lot more Zaxby's this time than there were a few years ago, the last time I visited. So,
Jonathan, did you have your fill of chicken sandwiches?
I had a banana pudding shake, and I got to get some banana pudding when I get down to the South.
That's great. And then you were in that wonderful city of Charleston, which is just a food lover's delight. We've been talking sort of generally about third quarter and kind of high level topics, but let's second quarter and sort of high level topics. So let's start to drill down a little bit. Jonathan, we asked you folks to give us some questions, and you said, ask me this, what happened to restaurant sales starting in June? So I want to hear that.
Well, they started taking a real turn south. Sales, if you looked at the spring performance, second quarter, they were okay. They were performing. Restaurant sales were real weak in the winter, in part because of bad comparisons or tough comparisons and more normal weather patterns. But they started improving as we got into the spring, and people were more optimistic. And then in June, they started taking a bit of a turn south, and most indices that I've seen have really gotten worse as the summer has progressed, and it's a little bit of a head scratcher. Nobody can actually really figure out exactly why that has happened. There isn't that event like earlier this year when the 2% FICA tax was returned. There wasn't that event that you could see where sales would fall. It just seems like the consumer is still in something of a weak state.
And gas prices comparatively were actually down this June over last, right?
Right. So you don't really see anything. I think one theory that I've heard is that auto sales are up, for instance, and during the recession, people didn't replace their cars as much, and now the average age of the vehicle on the road is much older than it typically is, consumers whose incomes are basically down over these past few years, they've had to borrow money to replace the family car, and as such, they don't have as much money to eat out at restaurants.
Sure. And Bob, do you see a little bit of the same thing around here in the Atlanta market?
What we see, Eric, is anecdotal, so we don't have a detailed survey on a month-to-month basis, only on a quarterly basis, but we do look at financials for restaurants almost every day. And I'm going to go out on a bit of a limb and say that Atlanta will once again beat the national average. We're seeing pretty good sales for June overall. As a rule, in Atlanta metropolitan area, we're seeing pretty good sales at the independent restaurants.
Are you saying they're going to be down but less than national average, or are you predicting that potentially they'll be up?
We actually think that restaurant sales, again, going out on a limb here,
Yep.
we think restaurant sales are going to be up. We're positive trending in the first quarter and the second quarter in Atlanta for 2013. We're going to positive trend again in the third quarter. You heard it here.
Oh,
Guys, listeners, you have the scoop here from your CPA, Mr. Bob Wagner.
well, we want to take just a moment before we take a commercial time out and thank Today's Restaurant, the food service industry newspaper, one of our sponsors. Today's Restaurant is the trade newspaper for the food service industry in Georgia and Florida and has positioned itself as your total marketing solution to sell a service or product for a restaurant in Georgia and Florida. You can get a free subscription to Today's Restaurant News delivered monthly by U.S. mail. This is Robin Gagnon. I'm half of that team of the restaurant brokers at We Sell Restaurants. Our show has 3 segments each week. We have just begun to kick off the first segment of our show, so make sure you weigh in and remain with us after the break. We'll return with the second segment and then go into Restaurant Reality, the time when we give you the full inside scoop and unbridled truth about buying or selling a restaurant. This is Robin and Eric Gagnon, the restaurant brokers on We Sell Restaurants.